Oh my god, oh my god, oh my holy god. Hi guys, Stephen Alford from Alford Fortune, creating fortunes for the future. Today we got results from our trading on a financial platform in the last week, and we got the date here today, 6th of July 2024, and these are the dates since the trades, and of course the trade has been consistent. 1, 2, 3, 4, 5, 6. 6 trades just made this morning before the market closed. And of course today is Saturday in New Zealand, and market closed at 8 a.m. And during the market just before it closed, these are the results of those trades. And if you see through to the dates here on the left, 5th, it has been 100% trade. This was a charge because I had this trade up for about a couple of weeks before I closed it in the profit. And I want to talk a little bit about that area also. So even though your trades could be on a negative margin in the red, this can only be productive if you own your own account. In regards to prop firms or funded account, this strategy won't work because the strict drawdown and the strict loss that's required. And I think so prop firm only allow you to have a 3% loss before you lose your account. But if you own your own account and you're trading your own money, this strategy can work quite successfully. Yeah, if we scroll down, you'll see all the trades since the 6th to 5th, and there was a lot of trade, as you can see. There are not a lot of returns, of course, and I'll show you in a moment the volume of the amount of money that was traded. All the way down to the 4th July, all in the green. And I'll show you in a moment then the strategy that's applied. And this is trading. It's just not opening a trade and walking away. Down on the 3rd of July, that's one loss there. That's another one that the trade has been up too long and they charged me for it accordingly after I closed it in the positive 3rd. And that's where it is at this point. On the 3rd, to get these sort of results, I'll show you a strategy that is used in that respect. I use what it's called investing.com, or you can use TradingView, and these are paid subscription accounts, but in this case you don't have to. If you use, say, your Google account to open up your account with investing.com, and it's pretty simple. Now I'm using at the moment, when all these trades, using gold, XAU USD against the US dollar, of course, and these are the amount of volume that's traded. As you can see here, 620, that's the highest one. Basically, they're only sort of small volumes, not a lot. And by managing this risk rate, as you see down 6 lots, 12 lots. And this is part of what it's called managing your risk, or if you can call it, say for example, I used 20% of what I had in my balance, or 6% for example, and I started this account with $7,000. Now it's up, I'll show you that in a moment. Okay, now the results, I'll keep a record of it. These are the trading results so far. I started recording it on the 24th of June, and it's pretty consistent, the trading sessions anyway. Scroll down a little bit. We started recording it on the 24th of June 2024, and these are the trading sessions so far. 5%, 6%, 1.73%, all the way down to this latest one. That's last night's trading result at 14.18%. So it's quite consistent, and these are the amount of profit that's recorded accordingly. Now there's a strategy. I'll show you how to achieve these high returns to a certain degree. And of course, if you have a lot of money, let's take that into calculations. I started this account with $7,000, and these are the results so far from the 24th to the 6th of July. Now, if you had $70,000 invested and you apply some of these strategies that I'm showing you, your $70,000 would be $80,000, and today's results is it's worth $120,000. Your $70,000 investment. If you invest $700,000, if you're taking that same calculation, would be $802,000. Then $700,000 in this week's trade will be up $1,250,000, $700 in results. So the system works. Of course, there is strict risk management, of course, to apply, but if you follow some of the true concepts or the seasoned trader's strategy, you'd be surprised how much money you can make. As I said earlier, we use the chart plot where an asset is moving. In this case, we're using investing.com. And do subscribe to my YouTube video. There should be a button below my YouTube video here. Also to join investing.com and any platform you wish to trade. And of course, I've also invest with what it's called crypto mining. So there'll be crypto mining link that you can also join, buy a contract, and you get paid every 24 hours in accordance with how much you buy the contract for. Now, in setting up your trading and analytical process with investing.com, to change the asset, change these codes to whatever code that you wish. It could be Forex, commodities, indices, whatever. We're only trading with gold against USD. Now, to bring up the signals or the indicators, go up here, click on that, and the two indicators I normally use, you can use it whichever one you want. I use Bollinger Band, okay, this indicator, and the best indicator that I normally use to trade is the stochastic RSI. Those are the two. Now, basically, what I normally do is change the time frame to 1 hour, or even 4 hours if you wish, just to see the long progress or the price range of the stock, how it's been moving. Yes, these candlesticks and these indicators shows the price movement as the stock or the asset's been trading on the stock market. That's people buying, selling, just like yourself once you join the system. And what we're doing is we're going to follow that trend. What other people are doing, what sort of activities they are actioning and participating in these financial trading platforms. So in this case, let's look a little bit about here in this area. In the last hour, so it shows there were a lot of sellers, which caused the price down. But it's not necessarily a lot of sellers, just how it is. You can see RSI showing that reflection, and then drag down the bottom here for quite a while, showing a sideward trend of the market, or the gold against US. In this point, it probably went on for an hour before it rises again, and then that shows in this reality. However, what we're going to talk about is how to use these. 1 hour time frame gives us a long range. Then this market is up the top, suggesting in the next hour, remember, only apply this when the market is open. So although this is Saturday, we're just going to use it as an example. The market is closed through the weekends, of course. In an hour, it points the market is up, and in the next hour or two or whenever, this market's going to come down according to what it's already shown. It's not rocket science, it's not perfect, but at least we can gauge it just by looking at a bit of history. And if history is always a good reference, then we can follow that. So that in an hour, it shows, yes, I can trade this gold against the US for within an hour. Mainly my trades will be going down. Okay? That's the long term. I'm going to try and avoid making trades going up. And most of my trades will be selling. Okay, so we go to 1 minute. The 1 minute chart shows me exactly at that point in time what is the best time to get in the market. Understanding most of my trades are going to be going down. Okay, wherever it is at this point, I'm not ready. The market's not ready for me, or I'm not ready to make any trades at this point until the indicators, the RSI, reaches above the 70% mark. The 70% mark of the resistance is this dotted line. Once it goes over, very similar like this one here, that's when I'm going to make my decision to open up a downward trend position. Okay, most of my trades now is going to be focused on purchasing or opening up a trade and going down. And basically that's all I do. If it goes up, open up my trade, selling to go down. Once it comes down, RSI reaches this point or below the 30% mark, I will make a decision then to close the trade. And if I see a trend, let's look at the trend. Here we go. That's a trend from that point to this point, or say this point here. Let's clear that for a sec, just to give us a bit of reference on it. We're talking about a trend now. Trend is a longer term process. If I've made my trade here and I won, consider letting my trade run, and I will captivate all that trend regardless of these up and down. It might take a couple of hours or even a whole day to go through that momentum, and that's another strategy altogether. Because I'm only trading, day trading, I focus only on this price movement between what the RSI is showing. That means when that RSI reaches the 70% mark, I open up my sell trade. Once the price drops down to this area, I close my trade. And that's it. Then I wait for the RSI to reach up here again, and then I make another sell trade. That's the process. Up and down. Once it reaches up the top again up here, very similar here, I open up a trade just to go down. I'm going to try and avoid making some buy trades, only because the 1 hour long-term process shows the markets will be coming down. That's all I'm doing. It's a strategy. I'm not saying it's the best strategy to use, but that is one strategy that you can apply consistently, get results like this, as I showed you. You might not get 100% like I have here, but you might get, say, 70%, 70 to 75%. But I can guarantee you, by using what I just shown you, that strategy, you'll be probably reaching 100% accuracy rate on your trading. Now, one of the last part of the process, and I'm going to show you, is this. This is a high-risk process or trading strategy. You'll see here I've got out of the money $6,000. These are open trades. Now, I don't use what is called stop loss, only because I use this high-risk strategy move. And remember I said I'm going to be making most of my trades going down. Basically, now to close all these trades later on in the money. In accordance with what the chart is showing, it's reached above the 70% mark. Now, a 1 hour chart tells us that. So I'm going to concentrate on my trades coming down. All these trades are sell trades, as you can see. So at this point, I'm going to try and recover all these losses simply following that strategy I just showed you. And that's the whole reason when I purchase a position, and if it goes out of the money, I just let it run. Because I know I can trade it later on as the market reverses. More so, learning to trade yourself out of a negative position, it's part of the practice. Because the more you practice, the more that you're going to be able to find patterns that you can relate to and trade successfully. Now, the point, you might not agree with me. That's okay. But I'm applying what is called a strategy to allow all of my trades to go through its process, and I follow the market. Then I learned afterwards, like as you see here, some of these trades are out of the money, that I can follow the market and really trade all my negative positions back into positive position, profit. Again, I'm going to show you my trading history. The trading history, this is the 9th of course. This is recorded later, 9th of July 2024. Now, results tells you. Now, this particular case, I know it's not a lot of money, but that was caught because the internet lag, and I closed the trade. Internet lag came through, held my closing position too long and went off the money. However, if you look at the trading history, they're mostly green. Now, the point that I'm showing you this, it's because it's the strategy that I'm applying to make sure that every trade that I close is on the money. Even when your trades are out of the money, you can learn to trade out of the money and into profitability. And again, it's to do with practice. The more you practice, the more you're going to find these amazing opportunities that the market goes up and down all the time. And it's nothing to be afraid of as long as you got plenty in your balance to carry you through the negative positions. As you can see, I'm down here now by 3,600 out of my total account. But that's not going to be afraid. I'm not going to be afraid of that fact. If I go well beyond it, then of course I'll blow my account. But if you learn to manage it, it's surprising that the market actually produces the results just as we want. Sometimes we have to wait. I'm not saying don't use stop loss. I'm just sharing you a strategy that I'm applying, and I'm learning also how to trade a negative position back into profitability, but just by being patient and wait for the market to do its thing. Because you got to appreciate, let's have a look at the long term. Let's say 5 hours, okay, down to July here. Notice the market, the trend is upwards, but during its upward trend, it goes up and down. And these are the areas that people can make a lot of money from, the up and down sort of positions, rise, low. But in the long-term outlook, you can see there's a trend. And you can make money if you understand this concept that I'm applying, just by looking back at the history and how the market has been producing its results. And you can take advantage of that even when you make a wrong trade. That's if you want to practice it. I'm not saying you do it. I'm just saying this is how I learned to be able to trade a negative account or any trades back into profitability just by letting them run because you have bought them. And learn then, okay, it's gone out of the money, it's gone against me. Do I close it at a loss, which is called a stop loss, of course, or just let it run and see if I can trade myself out of that negative or out of my negative positions? And the beauty of it is that you learn how the market performs, how your emotions also involve in the decision making. And this is the beautiful thing, that why I let my trades continue even if they're out of the money. As you can see here, a couple of them is in a $700 loss, but I trust the market. I trust the market. It's going to go up, going to come down, and I'm going to get ready to prepare to close my trades as the market produces its result. As I said earlier, it's a high risk strategy. You don't have to practice it, but if you do, be patient. You're going to learn a lot of things about how the market performs, and you can react not with panic or negative sort of thought, but react in a sense to the degree that you can say, okay, I'm out of the money now, this trade that I have made, how can I trade back that loss, the losing trade back into profitability? Simply just let it run, let the market do its thing, and you're just going to follow. Now, if we look at, say, the 4-hour chart or even 5-hour chart, you'll see dates down the bottom here. June, the beginning of June, see the market just goes up and down. Now it's up high, where most of my open trades at the moment is caught up in this position. So I'm just going to wait for it because it looks like it's going to come down anyway. But if it continues to rise, then that's a different strategy altogether. But in accordance to this chart, I think the market will be coming down at some stage. That is the forecast for the coming week, which is, 2 days? Probably the 8th, when the market opened on the 8th, that's Monday of July. We'll be looking at applying that strategy to recover all these losses, of course. It's a high risk trading process, but you need to have a substantial amount of balance to be able to support this high risk strategy. And I will make another video as I trade this negative account back into the positive and remove these off of my portfolio. But more importantly, as we close this video, is the strategy works to producing 100% trading results. If I were to close these trades at a certain point of time, which is called a stop loss, then the results would have shown up on my trading results. That's the reason why. It's not purposely done like that. It's just the strategy that I apply in trading the financial markets using a high risk strategy, as you have seen, not closing trades on a stop loss process and just let the stop run. And this morning the trade was in my favor and all my buy position has been closed, all in the positive, resulting in these latest results, of course. And that's what I'm looking at, trading the account from the negative back into the positive. Once again, if you want to learn more of these trading strategy, you only got to just try and get hold of me somewhere, and my contact details down the bottom of my YouTube video here on Telegram, and just ask the question to show you some of these strategies. Otherwise, this is Stephen R. Ford from Ford Fortune, creating fortunes for the future. We love you. God loves you. We'll see you in my next video, and trade successfully.